Good morning. This is Joe. Ask Joe About Money, and it is February 22nd, 2023. The market just opened here, and we're going to do our daily market prep. So I put in, this is the overnight low, this is the overnight high, and now let's go ahead and change to regular trading hours. Okay. Let's also go ahead and add in, so let's put in a 5-minute chart, and let's go ahead and add in yesterday's close. All right, so we have yesterday's high. We have the open of the week, which was yesterday's open. We had a distribution day yesterday. So let's go through all the lines here. This is just a resistance zone that I've drawn here. So yesterday's high, open of the week, which was yesterday's open. Then we have the overnight high. We have yesterday's close and yesterday's low. All right, so we have all our numbers in here. So yesterday's low, yesterday's close, open of the week, and we know the green line is the overnight high and the red line is the overnight low. All right, so we have our roadmap set up. I always like to keep yesterday's price action on the screen, but let's go ahead and let's look at the bigger picture first. So bigger picture, again, the market sentiment is negative. Okay, we have been going down. Okay, it doesn't mean that we're going to keep going down, but we also can keep going down. We are at potential support down here. Just to be noted, it doesn't mean it's going to affect our trades, but can we expect a move back up to here over the next couple of weeks? Sure. Can we expect another move down? Sure. But what we're going to do is the same thing that we do every single day, and we're going to read price action, and we're going to see what happens, and we're going to see if there's any trades. So far, very small gap up where it opened, and so we have to be aware that after a big distribution day, there is a pretty good probability that we're going to be in a range at least for a couple of hours this morning. We have to be aware of that and not be chasing any trades, because after that big distribution day, we could very well just hang out in this range right here, or we will see price action, and price action will tell us differently. But so far, we're just going to watch and we're going to wait. So far, we're about 15 minutes into the market. And this is so far a muted open, as to be expected after yesterday's big down day. And so first bar was a bull bar. So we're working on 3 bull bars right now, but you can see from the price action, really lack of enthusiasm. But again, that could change in the next minute. We also have the Fed minutes being released later on today. But again, we're going to watch price action. That was yesterday's price action after the gap down. So we are in a consolidation range. Now, will I be willing to change that outlook if I start seeing some big green bars closing at their highs? Yeah, I'd be willing to buy that. But right now, we're in a big resistance zone. Let's draw that in. So you could see from yesterday's lows. So let's draw the zone in like this. So that's where we are. So do you want to be, if we happen to be in a trading range, which so far we are from yesterday, do you want to be buying at the top of the range? I'd rather buy higher up here, because look, there are sellers here. Now, are the sellers going to persevere and bring the market down? I don't know. So far we have 3 bull bars, but they have wicks on top, and so we're going to see what happens. There's a lot of resistance here, but again, just because it's resistance doesn't mean that this cannot convert. We did make a higher low here. I'm just running through some different options that could materialize. Okay, there is a higher low there, but we're high. When we're in a trading range, okay, you want to sell high and buy low. So buy low, sell high. I'm still defining this as a trading range, so I don't want to buy high, but I'll buy higher once there is sustained buying. But right now, this is more of a situation where I'm potentially looking for a reversal, because I want to sell high in a trading range, but I'll buy higher if I see that this could be the start of a bull trend. So let's see what happens. So far, they're buying it. They're buying through the resistance here. We're going to see what happens. So we have 1, 2, 3, 4 bull bars, but I'm still of the mindset of this could be just a bull, okay, a bull leg in a trading range, right? So far, that's what's happening. So So now we can see the sellers stepped in here for now. So we have these 4 bull bars, and so far this one bear bar, only 1 minute in, has pretty much erased these last 2 bull bars. So we could just, this is just to notice what type of market that we're in. I think we can all agree that we're not in a trending market. The reason why we have to look at context is that in a different context, this could have been a buy. But because we're coming up into resistance, because yesterday was a big distribution day, I'd rather buy higher than buy at the top of a trading range, right? And the standard word is breakout, right? I like that word breakout because it doesn't really mean anything. But I'm going to see what is the reaction here at the top of the trading range. Because if buyers step in and they break through, right now, sellers are stepping in. So what's going to happen? I don't know. But I'm going to be very hesitant, not hesitant. I will not buy at the top of a trading range. And right now, we are in this trading range. That could change in the next minute, sure. But right now, we're in this range. And notice something, and I talk about this all the time, it's not exact. We say, well, look, but technically we broke past this by a couple of ticks or a couple of points. That's not how the market works. Okay, the market's going to constantly test. Right now, the market's testing to see, are there buyers up here? And ultimately, if there are no buyers up here, you know what the market's going to do? It's going to come down. So that's what we're going to look at. So that's why I don't want to be speculating if there are buyers, because the market doesn't know if there are buyers yet. It's testing. We're in an auction process. If there are buyers, you know how I'll know? I will see a big green bar closing at its highs. For now, I'm not seeing that. I did see that this was a big red bar at one point, and the buyers did step in here. So temporarily, now let's see how this bar closes. So now sellers are stepping back in. This is how we watch price action. Okay, we don't predict. And again, knowing that we're in a trading range, because that's why just bar patterns by themselves do not work. It's all based on context. This is the context. Yesterday's trading action, we landed in a trading range at the end of the day, and we are still in that range. So if you were just looking at today's price action, you may say, wait a minute, go ahead and buy. Let's say you just saw this, right? Let's say you didn't have any context. And let's say the market opened, and you were just looking at 1, 2, 3, 4 bull bars. You say that's a buy, right? And if there was no prior information, maybe, but the reality is that we do have prior information, right? We do have prior information. Look at all this congestion. Now they're selling again. So again, the trades that we avoid are just as important as the trades that we take. Most traders that are not profitable, if they would just avoid trades like this, would instantly make them profitable, because the big winning trades just happen. But these trades here where you're buying at the top of a trading range. So what is the lesson? We need to identify early on, are we in trend or are we in trading range? So this is trading range, because this is the top of the trading range. If anything, we want to sell here. Now, I would not recommend for beginners to be selling here, because it's very difficult to trade against one, because temporarily there was buying, now they're selling. So you have to go against the trend. So what I prefer to do is let's wait for a trend to develop, and then we could hop on that trend. So right now we are at resistance, and we could spend the first couple of hours of today being in the trading range. So now they put in a bear bar. Okay. So again, this is potentially a sell below this bear bar. But again, what are you playing for? To the bottom of this? Because we know we have a lot of resistance here. So I'm not going to take this trade, because again, it's too tight of a trading range that we're in right now. But at this point, this is where there are sellers and this is where there are buyers. So that's why I didn't want to buy up here. Now, if it comes down, let's talk about the bearish case. Where's my red bar? I thought I had a red bar in here yesterday. What would be the bearish case? The bearish case would be if we start seeing selling. Oh, here's my red bar. If we start seeing continuous bear bars and we start breaking through support, we could get into that. Now, the market is holding here. If we just measure this move right here, buyers stepped in right at 50%. So this could be, and this is why it's on. We pay very close attention here, but I don't want to play in this zone. If this breaks out above here, we're going to have a potential long to look at. So let's see how long we're going to stay in this range. We're not going to predict.